It is time to hit social media for our hashtag segment. And for that, we'd like to welcome in Landon Swan, the co-founder of LikeFolio.com. We have fast market contributor Jenny Horn with us as well to talk some Uber.
Uber, so they have earnings post-market today, but this is a stock that's struggled a little bit, of course, since their IPO. They're down about 30%, I believe, since their IPO price. But Lyft, their competitor, is also struggling. So this is kind of a rough space for these ride-sharing companies. But I feel like we often forget that Uber is so much more than just ride-sharing. They also have Uber Freight. They have Uber Eats. So they are a bigger scale than Lyft. So it's hard to kind of compare them, I think, when you're looking at just the companies side by side. So Landon, I'm really curious to see what your data has on Uber.
Sure, yeah, I think you're right. It's a tough industry, and I think it's a longer-term play for Uber. But of course, with earnings, we don't care about long-term right now. We want to know how they're going to do. So when we look at purchase intent, that's when people are talking about getting in an Uber, essentially, using their services. We can tell that the 90-day moving average is just about at all-time highs. It's off just a little bit. And as you mentioned, the IPO price, I think, was about 45. It's down, 30 or 33% since then. So the stock is definitely sold off. And so I think that with purchase intent at or near all-time highs, you could see a little bit of a value play in Uber at this point. I'm sure there's tons of Wall Street analysts that would disagree with me at $51 billion valuation. It's tough to say they're undervalued, but the only caveat there I see is that analysts, I think, are expecting about a 18% increase quarter over quarter on revenue. We've got about a 6% increase on purchase intent quarter over quarter, so I wouldn't be surprised if they miss. For us, though, it is a little bit longer term play because Uber is more of a local logistics company, and they're getting to the point where they can just click a button and all of a sudden dominate another industry. So if you look at, like, for example, Uber Eats, there's so many other companies in that space, but very quickly with the flip of a switch, they were able to enable that, and they've got all the drivers out there delivering people, and now it's not very difficult for them to start delivering food or start delivering products. So you can tell when they flip that switch, and all of a sudden, this is at all-time highs. Uber Eats is doing extremely well. We've got them, I think, right at the top of that space, food delivery. And so for Uber, I think it's a longer-term play with just local logistics in general. Like I said, delivering people now, but food and products can come later.
Landon, does your data from LikeFolio ever speak? I see that it does in a way to topical things like their march towards profitability, and are they going to get there? Do you guys ever mention, or do you guys ever monitor certain conversations versus others? Obviously, there's an Uber Eats conversation, there's an Uber conversation, but some people are worried about when are they going to be on a path to be profitable, and that's going to lead to higher prices. And does that bring general taxi cabs back into play? I mean, all these things. Do you ever get specific on your data like that?
Yeah, so I think that kind of what you're getting at is, we're listening to the consumer right now. What does the consumer think about these products? Are they using them? How often are they using them? That kind of thing. We also do look at investors and how they think about the company, and this is definitely one of the most polarizing. The bears and the bulls fight it out quite a bit. In fact, I would say that the bears are a little bit stronger right now. Definitely a lot of hate on Wall Street for Uber. And I think that really comes down to expenses. I think they're burning around $5 billion a quarter. That's nothing to laugh at. And so, but one thing when you think longer term, right now the revenue for moving people around, just general Uber, is a 75-25 split. If you take that 75% out of it, and you've got driverless cars, and they're delivering people, they're delivering food, they're delivering products, then all of a sudden they could be a huge winner. Now I'm talking 5 or 10 years down the road. So this is definitely a longer term play. And I think that maybe they have some trouble in this quarter, and it could be a good long-term investment if you get a little bit of a discount after this earnings report.
$5 billion a quarter. You're talking Jenny Horn kind of spending there. You're not talking about the minor leagues.
Especially on Uber alone. I know, I'm like, Uber takes too much of my money. But you mentioned a really good conversation. That's taxis versus Uber, right, which is still, I think, a huge issue for them because people, of course, love to compare Uber, Lyft, taxi, and they just want the cheapest price point. So
exactly. I
saw that definitely on Twitter today. I mean, people love to compare how to get the cheapest price, of course. So our first tweet is from Chris, who says, is it just me, or are sharing economy services becoming just as expensive as their centralized counterparts? Uber is no longer cheaper than taxis. Airbnb is no longer cheaper than hotels. The list goes on. So Landon, I'm really curious if you see this at all in the consumer happiness, because it seems like this would affect how much people are using Ubers, how happy the consumer is, and just kind of all of that.
Yeah, I think we do. We definitely see that, and I think this is kind of a. I think the honeymoon phase is a little bit over for companies like Uber and Lyft. I mean, 5 years ago, it was always a nicer car and a friendlier driver. And now it's basically just a guy who used to drive a taxi cab and now he's driving an Uber, and it's the same kind of experience. And if you go to an airport, sometimes you got to walk, for 5 minutes to get to the Uber area when there's 15 cabs waiting for you. So I think a lot of people are seeing that, and it's just the markets in general. That's how it's going to work. The prices are always going to move towards each other, and they're going to kind of settle out. So I think that is definitely a disadvantage for Uber and Lyft. But I think if you're going to be bullish on Uber, you've got to believe long-term in their ability to disrupt local logistics. And I think driverless cars is going to go a long way towards that.
Yeah, and Landon, building on this too, I think this disruption is similar that we've seen in other spaces too. We talk about streaming all the time. Well, as there's more and more streaming packages now, as you bundle those up, it's the same as cable and, go down the list. But my question for you is coming down to this branding power. How much is it the fact that, like, even if I'm getting a Lyft, I'm saying, hey, I'm going to get an Uber to go there. How important is that for the long-term success of Uber? Is their brand's kind of seen as the verb of the space?
Right. I think that's really important. Obviously, I mean, you're talking about like the Kleenex or the Coke of the ride-sharing world. I think they've definitely got a massive advantage there. But I think that over time that will decrease as, just people start to share the fact that, Lyft can sometimes be cheaper. I know whenever I'm pulling up a ride-sharing, I often, if it's a longer ride, I compare the two and get the cheaper one. But if I'm only looking at one, I often look at Uber first just because it's got the namesake. So, yeah, it's a good point.
So kind of final thoughts then here, Landon. Obviously, you can't help but notice the growth is starting to happen in the Uber Eats segment. I would assume that's a lower margin piece of their business as it requires more for the drivers, and there's also a third party involved with the restaurant. Is that a little bit of a concern, to Kevin's point about the march towards profitability, if they're really only growing in those lower margin sides of the business? Or like you said, is this just a long-term play as if potentially emerge as a winner, they're going to be able to control those margins down the road?
Right. I don't think with the current model, the way it is, paying drivers 75-25 and just all the things that they're doing right now, I don't think they can ever become profitable. But in the future, driverless cars, delivering food more, delivering products more, and just continuing to deliver people, I think they could be extremely profitable, and I think they could be a big winner in this space. So, but again, that's 5 or 10 years out. So if you're playing this quarter, use caution.
All righty, Landon. Great stuff as always. I'll look forward to talking to you again this week. And Jenny, thanks to you as well.